Let's talk markets and a quick check of what's going on this morning. We are looking at a lower opening for the broader averages, but of course it's all about the GDP report, which is out in about 1 hour. Expectations call for growth in the GDP for the third quarter of 2%. Our next guest is placing bets on Russia despite these falling oil prices. Joining us right now is Rogers Holdings Chairman Jim Rogers, back from Asia. Good to see you, Jim.
I'm delighted to be here, Maria.
Thank you so much.
I wore my Christmas tie just for you.
I see that, and that's great. Very nice.
Happy holidays.
And to you. You, a long time ago, told us you wanted to invest in Russia, buy Russia, and even though the economy there is plummeting because of the price of oil, I have to believe.
Yeah, it is. But
okay.
My largest stock holdings, believe it or not, the Moscow Stock Exchange, Aeroflot, and Fosag are all making all-time highs. I'm in shock.
Wow.
I don't deserve to be making money, but I am.
So they're doing well. What do you think's behind these moves?
Well, partly Mr. Putin is doing everything he can for Aeroflot as well as for the stock exchange and the fertilizer company. I'm very bullish on agriculture, and they got great cost advantages because the ruble is collapsing and they sell in dollars.
Right. Okay, so you still like Russia?
So sticking with the Russian theme, if oil stabilizes or rallies, is that part of the thesis? Well, that should...
Then you should put a lot of money into Russia if that happens, or Kazakhstan and some other countries that are being killed by the price of oil. Yeah, if it happens, sure, I might make even more money.
But now, a lot of investors feel the best way to get long Russia that don't have the expertise that you do to go in and buy an individual name.
Don't think I have any expertise. I learn everything from Maria.
I think you do, because you've been coming on talking about Russia and all of these faraway places in terms of, you know, under pressure, and yet you've been right. Sometimes
even I get it right. Sometimes.
So is there an ETF to...
Oh, yeah, there are ETFs. There are ETFs that trade in New York. RSX and ERUS are a couple of ones that pop into my mind. Yeah. I actually own more shares than I do the ETFs, but yeah, it's a great way to play.
Okay. And is Putin being there and being in charge a key part of your thesis there?
Listen, one reason I've invested in, I was very negative on Russia for 47 years, very negative on Putin for 15 years, but Putin has changed dramatically in the last 2 or 3 years. Somebody in the Kremlin has, and that's why I started investing in Russia. After 47 years of being a bear.
How do you think he's changed, Jim?
He understands He can understand you can't just take money away from people. You can't just shoot them. You can't just put them in jail. You have to play by the rules. And the Russians are starting to play by, in the financial markets, are starting to play by the rules.
Huh.
That's really interesting. I think, you know, considering his praise for Donald Trump, who's doing so well in the polls, if they're our next president, perhaps we'll see a new era of American and Russian economic cooperation.
I'm not investing in Russia because of Mr. Putin. I mean, Mr. Trump, but I am investing because of other changes.
What do you think about this new love affair between Trump and Putin?
Well, Mr. Putin may get Mr. Trump elected, but I'm not sure that's good for America. It might be good for Russia, but I'm not sure it's good for us. Other markets around the world, the Chinese, I'm not sure what the Chinese think of Mr. Trump or what Mr. Trump thinks of the Chinese.
So you're invested in China as well?
That's my largest long position.
Tell us about that.
Well, I mean, China's done great this year. If you look at the numbers, the Chinese market over the past 12 months is up 17%, and America's down. So, you know, I don't deserve to be having a good year, but I'm having a good year. And
but do you worry about the fact that, look, like I said during the commercial break, they just turn the lights off when they want to? If they decide, oh, let's shut down the market, I mean, you know.
Oh, they could. But that could happen. It could happen in New York. It could happen everywhere, unfortunately.
It's not going to happen in New York the way it happens in China, though.
Maria, I worry about everything. I've been investing long enough to know you have to worry about everything, and then you still think of some other things to worry about.
What sectors in China are you bullish on in particular? Because the banks worry me quite a bit.
My largest positions are airlines and tourism in China, and the collapse in the price of oil has been good for airlines all over the world, as you probably know. Tourism is going to boom, is booming in Asia. Pollution control. I've been in Beijing 3 times in the last month, and it is filthy. It is horrible. So somebody's going to make a lot of money cleaning up China, I hope.
If they allow, how does it get cleaned up if, in fact, the reason for it is, you know, they're the producers of products of the world. They've got all these factories spewing out pollution.
I know they do, but they're now making, they don't like it either. You walk around Beijing and everybody's complaining.
I could not live there, I don't think.
Yeah, that's why I don't live there.
Right.
I know
you live in
Asia,
China. I don't live in Singapore.
I live in Singapore.
Jim, I've made the argument to people about China's airports, and I think it's 130 roughly international airports they're building. Yep. And people have shot back saying that's like the ghost cities they built. They're building these airports, but no one's ever going to use them.
Michael, I've been going to China for 31 years, and I've heard about the ghost cities for 31 years, 30 years. And yeah, there's overbuilding. And yes, I'm not bullish on property in China.
Yeah, I was just going to say, that's what they say about buildings, too. They build all these buildings and no one's in them.
Right. But now people are filling them up. It's astonishing. I've been going to hotels. I can remember 30 years ago saying, who's going to stay at this hotel? Now it's torn down. It's so successful, they sold it and built another one. Listen, there are going to be bankruptcies in China. Do not get me wrong. There's too much debt in China now, which did not exist before. And you're going to see bankruptcies, especially in property. But we had horrible recessions in America as we grew.
Right. Let me take you back to America for a second. Do you like what do you like here? I mean, the last time we spoke about this whole collapse in commodities. Where are we in that cycle, first of all? I think of you as the expert on commodities.
Well, as I said, maybe I don't deserve to be making money, but my airlines are going through the roof because of the collapse in the price of oil and some other things, too.
But what about
I told the Indian TV the other day, another month, that oil's going to go to 32. I might be right. But listen, don't listen to me. I don't have a clue.
But what about all the other commodities? You're talking about copper, iron ore, steel, all those industrial metals that are used to build houses and cars.
Iron ore and steel, I don't, there's not a public market, so I don't pay that much attention, except to know that the iron ore companies just went berserk, and they're still opening mines, believe it or not, even though the price is down 75 or 80%. But other commodities are making lows, at least. But again, I'm terrible at market timing.
Do you like anything else in the U.S. right now, Jim?
I'm short the U.S.
You're short the U.S.?
Including junk bonds, yes.
And how bad do you think it gets?
If I told you, you wouldn't ask me to come back.
So you really think we're going to see a big sell-off in the U.S.?
It's been 7 years since we've had any kind of significant decline in the American stock market. That is extraordinarily unusual. It's never happened like that I know of. You know what's happening with the central banks in America and the rest of the world? They're making terrible mistakes, and we're going to pay the price for it. And the next time around, because the debt is so much higher now, we're going to pay a serious price. I'm short junk bonds in the U.S., and I'm short the stock market.
And I know you're on the other side of that trade.
I'm definitely on the other side, and I think we need a longer block to have that total discussion. But I think we don't necessarily need, Jim, because we have 7 years of growth or a good market. That doesn't mean we need a correction.
I mean, do bull markets end by old age, as you know?
They don't necessarily. I don't think
I may well be wrong. I've been wrong many, many times in my life. I can't tell you how many mistakes I've made in my life.
And the dollar?
I'm long China,
Does that mean
and I'm short the U.S.
The dollar goes down? Or?
Oh, no, I'm long the dollar. You know that. I've been telling you for 3 years.
I know, but I'm just wondering if you change your dollar call because you're so negative on the U.S.
My U.S. dollar, this is the largest currency position in the long side. My second is the renminbi.
I'll take the long U.S., short China for 2016.
Okay. Well, the Chinese stock market's down 50% from its all-time high. The U.S. is making all-time highs. My parents taught me to buy low and sell high. Your parents obviously taught you to buy high and hope it goes higher.
No.
I have a different view.
No, it's different. I think the volatility in China is something that I don't really want to be involved with because I think it's a lot government-controlled. And when they start shutting down companies and I can't get out of those stocks, I don't really want to be invested there. But the U.S., I see it as near all-time highs, but new highs a lot of times tend to make newer highs. And so I think there's a lot of upside there. And my parents taught me to stick with what's working. And I would rather be long the U.S. than China.
There you go.
We need to have our parents here someday.
Jim, good to see you. Really good to see you. Jim Rogers joining us with your insights, always valuable. We appreciate it, Jim. Up next.